Hi, I'm Joel, founder of Easy Prop Tax LLC, and today we're going to talk about why homeowners win more than agents do. So the first thing is that you know your property very well, and not just your property, but the surrounding neighborhood, and you have unlimited time to work on your case. It seems like that's not a big deal, but that actually makes a huge deal. It makes all the difference in the world because the agents who do this stuff, they don't know your property intimately. They don't, generally speaking, they rely on mass appraisals and aggregate numbers for on average for the whole neighborhood, generally speaking. So basically, they look at your neighborhood and they say, oh, well, I think the average value is XYZ for the neighborhood. But that's the thing, they don't really know. Like they have an idea of it, and maybe they can think of a market value based on, for example, being a real estate agent. But is it really accurate? Well, they don't really know. They rely on the mass appraisals, just like the county does, right? So unless they're really looking at every single house in particular, it's very hard for them to understand what your exact market looks like. And this actually matters a lot because if your lot doesn't have a road, or if your house is partially rebuilt, not fully rebuilt, which might show up in the county information, but just partially, like there's a lot of key information that's unrecorded, even by the county. And if the county doesn't have it and your agents don't ask you about this stuff, then how are they possibly going to capture that information, for example, that only you would know, right? And then on top of that, even the information that they do capture doesn't necessarily make it into the county model. So to give an example, my property this year was being compared. I don't have any sort of real amenities on my property, but it was being compared to a house that had a large outdoor pool, among a lot of other factors that made it not comparable. So the fact that it had a pool was actually captured by the county, but they were still claiming that, oh well, the pool is part of the valuation, and they're basing, essentially they're comparing my property without a pool to a property with a pool. That's not good comparisons by any sort of valuation standard. You just don't do that. But the county did it anyway, and they had that information. Like you could see that the county knew that there was a pool, but somehow they didn't manage to get that into their model. So um, my point to all of this is that people who are talking to about the exact specifics of their own property, they often can win and win large reductions because they know those facts. Like just by saying, hey, that property has a pool, mine does not have a pool. You can't say that they're essentially comparable and that I should be basing the value of my property on the value of the property with a pool. It doesn't work like that. And when you do that, then essentially you can knock out the comps. And if you do that to enough comps, if you can say, hey, these are 3 examples out of the 10, that the county provided, guess what? They got no case. And if they don't have a case, then then you win by default. And if you win by default, then the only question left is how much do you win? And that's where evaluation helps. And so the agents, they might win. And if they do, they'll probably get you to the average value for the area, which isn't necessarily what your house is worth, right? It's not based on the specifics of your property. It's based on the area. And that still doesn't account for the specifics of your property, which might well make you below that average. So that's why homeowners win, and they win bigger than agents do on average. If this content's valuable to you, please like this video, share, subscribe, and let me know what you think in the comments. I'm more than happy to answer questions, and you can reach out at any time. It helps me create more content for you. Take care.